So this is our special feature for today. The topic is the case for July rate hike. Okay, so far the Federal Reserve moved only when they had a press conference, right? So the Fed meets 8 times a year. Every second meeting there are fresh forecasts and a press conference. So far, these are the only events when the Fed moved. Announcing the end of QE, talking about ideas for a rate hike and raising rates back in December. They always say that every meeting is a live meeting and that they can always call a press conference if they make a change in policy and provide more explanations to markets. That's why most market analysts usually look only at the big meetings, at December, March, June, and September when they have press conference. And that's why we're talking about June or not June. The word June actually appeared 6 times in the recent meeting minutes because the focus is on June, not on July, not on October, November, not on months when there are no press conferences. They usually use the other meetings just to give us hints about the bigger decisions coming on later across the road, along the road. Why could this time be different? Well, they meet on July 27th, and this time I suspect that they could announce a press conference. Why would they opt for July? I prepared a few reasons for that right here in the slide. So first of all, it's after the Brexit referendum. Again, there's a higher chance, a good chance that Brits will vote to stay in and that they will not rock the global economy. If Britain leaves the EU, it has big implications. The implication is not only that a different trade deal for the UK, but also perhaps the beginning of the end of the EU and lots of movements in markets. So the Fed would not like to raise rates on June 15th with Brits going to the polls on June 23rd. Another reason to hike in July is that it's far enough from the US elections. So if they wait until September when they have fresh forecasts and a scheduled press conference, it's too close to the elections in September and they would be seen as impacting markets, okay? Another reason to hike in July is that by the end of July, they also already have the initial estimate for Q2 GDP. We're expecting a rebound in the US economy in the second quarter of 2016. What's happening actually now? We are now in the second quarter, and they'll have the data, the first estimate already available around the same time. They could also do something different this time, call a press conference. Let's say after we have the Brexit referendum and Britain decides to stay in, I'm assuming that in the end of June, the beginning of July, they could say, okay, you know what, in our July decision, we're announcing a press conference. That could be a very thick hint that that they're going to raise rates. In addition, why do I think we could have a rate hike in July? Is that bond markets are implying that. Okay, I can show you again. The chances for a rate hike in July, according to bond markets, are close to 60%. Okay, 41.6% that rates will remain unchanged at 0.5%, and higher chances for a rate hike. So bond markets are telling us that. Of course, bond markets do not know everything, but Fed officials are beginning to talk more and more about July. We heard that first from Bill Dudley of the New York Fed, number 3 at the Federal Reserve, and we also heard more people talking about the summer, which summer is July, basically, okay? So I think there's a better chance than not that we'll have a rate hike in July, assuming the data is okay, assuming no Brexit, but that would be that's certainly a possibility. Another reason to hike in July will be that, well, in August, markets are usually more quiet. And if they hike in July, when markets are still quite active, this rate hike could be forgotten in August. Now, it's not guaranteed. Markets last year at the end of August crashed, especially in China. But we could still, it's still usually a more quiet period of the year. We could see things, I mean, slipping through this rate hike and forgetting about that. So anyway, this is the case for rate hike in July. I believe that if we have a rate hike in July, it'll be very, very well communicated. It will strengthen the dollar just a bit, will not cause a market tantrum, and eventually will sort of even provide a relief rally for markets. It means commodity currencies could rise and the Japanese yen could weaken. So perhaps the opposite reaction of what we could expect, because the Fed will manage to communicate it so well that it'll pass through smoothly. Now, if things get worse towards July, they can always back off. But if they raise rates, it'll be very well communicated. And I think markets will accept it in a good manner like they did back in December. Another reason to raise rates in July is that, as I said, it's a little bit of a quiet period in markets. And also in December, they raised rates just before Christmas. It wasn't totally quiet. They weren't sort of slipping it in very quietly, but it was just before the holidays, and they could do it now just before the holidays. Okay, so that's our special event for the case for a July rate hike.